You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. It's nice to hear that music again because that music can mean only one thing. It is time once again for Options Bootcamp, the program for you. The active, the super active, as we saw last year. Retail stock trader, probably dipping those toes or maybe diving whole hog into the deep end of the options pool. Either way, we got you covered here on Options Bootcamp. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Coming at you here for the first time in 2021 here on the old Options Bootcamp drill instructor proving ground here. It's fun to be back. I got my whistle. I got my hat. I'm ready to go. But, you know, I'm missing one thing. Something's not right. It's just me here on the old drill instructor proving ground, looking around, say, you know, that means, listeners, we got to add someone else to this mix. So let's go back out to that options mecca known as Frankfort, Illinois. We are joined once again by Mr. Dan Passarelli, a.k.a. the black-hatted one himself, a.k.a. the founder of Market Taker Mentoring, a.k.a. the author of one or two options-oriented tomes. Mr. P, welcome back to the Options Bootcamp program for the first time in the hallowed new year of 2021, sir.
Well, gosh darn, Mark, it is so darn exciting to be here. I can't wait to kick off the new year.
Should be fun, and since we're kicking off the new year, what better way to do that than by looking back at the, I think, hashtag insane year that was 2020. A lot happened last year, Dan. I'm not sure if you caught it all, but it was a pretty active one.
No, I didn't notice anything at all. Oh, my God. Yeah. Holy Jesus. I'm so glad that, well, you know, you expect, oh, it's 2021. Everything's different now. Alas.
Yes. We were all rudely dissuaded from that very early in the year that, yeah, still some madness afoot out there. But speaking of madness, last year was a mad one, so we thought what better way to kick off the new year than by looking back, looking at the madness that was afoot throughout the entirety of the market, the volatility, the volume, all that good stuff. And, you know, there's some lessons to be learned from all of that. So I think we're going to do that today, a little bit of our lessons learned from 2020.
Well, in boots, time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me?
always festive, always happy, even in the depths of January here in Chicago. It's always 4th of July or Flag Day or something here on Options Bootcamp. Yep, it's time for options drills. We're going to go back and look at some of these things that we experienced in the options market last year and maybe explore what we can learn from them, how we can apply those to our trading and to our portfolios here in the hopefully quieter, hopefully less tumultuous year that is 2021. Dan, I have compiled my full list, my top 5 lessons learned from an options perspective from 2020. Even a bonus thrown in there, so I actually did a top 6. What about you, sir? Do you have your list ready to go? Did you do your homework?
Yeah. My dog ate it.
Your dog ate it. How did I know you were going to do this? I'll tell you what. I'm going to kick things off. I'll buy you some time to mull over your first entry on your list as I start things off. See, listeners, I did my homework. My dog didn't eat anything because I don't have a dog because they're very messy. All right, let's go on around here. My number 5 on my list for lessons we all learned or were reminded of in 2020. This one came right around the middle of the year. It was actually a pretty tragic one. It's one of the few lessons on my list that actually had real tragic human consequences attached to it. You'll recall right around the middle of last year, we all were awakened to the risks perceived or perhaps misperceived around early assignment when it comes to options. Back early summer of last year, we saw that Robinhood customer Alex Kearns actually commit suicide out here in the suburbs of Chicago. He drove his car in front of a train after he saw a negative balance of $700,000 pop up in his Robinhood account. We discovered later that he was selling put spreads in Amazon, obviously very pricey stock, and it turned out he was assigned early on one of the short legs of those put spreads. So we did a whole episode about this. If you have a lot of questions about this, listeners, I encourage you to go back and check out our episode that we did specifically on this. But moral of the story, the thing that you really need to learn from this, if you're going to be trading options, particularly if you're going to be on the short premium dark side, and I know a lot of you like to lean that way, is that you need to know how your account margin is calculated. You need to know how your buying power, all those magic voodoo numbers that they throw up there on your brokerage screen, how they're calculated and how your trades could impact those, and how if you're, let's say in this scenario, assigned early on one short leg of that put spread, first off, you need to remember, obviously, take a deep breath, because as we discussed on that episode, getting assigned early isn't the end of the world. In fact, it usually means a good thing. Someone's probably panicking, doing something that they probably shouldn't be doing. And also, particularly if you're doing it the way this customer was doing, if you're doing spreads, then you don't have to worry about that. You have that other leg against it. And now if you're naked short, pay attention, because you don't want to come in with unplanned, big, massive swings in your account. But if you do, as we teach here on the show, keep your risk mitigated and use spreads, your risk hasn't changed. You may see a crazy debit because maybe your broker doesn't really process these things very well, and Robinhood, to their credit, says they have fixed this problem now. So hopefully we won't see this again. But, take a deep breath, look at it and say, actually, you know what? I still have this other leg of the spread on. My net risk hasn't changed. We walked through an entire example of why this is the case on that episode we did last year. Listeners, I encourage you to check it out if you want more information. So my number 5 on my list, bottom of my list there, for lessons we learned of last year, be cognizant of what early assignment means. It isn't just the death knell that it seems like when you see these massive, crazy debits showing up in your account. You don't really understand them. Let's sit down, take a deep breath, don't do anything rash, and actually listen to a show like this, figure out what's going on with your account. Understand if you're doing things like put spreads, you don't have anything to be worried about. Your risk hasn't changed. It's just a crazy debit, and that should hopefully be sorted out by your broker pretty quickly. Anything to add on that, Dan, first? And then B, what is the first entry now that I've bought you some time on your list, sir?
Well, I've got a pretty darn good list, Mark. And, I would like to just share with the audience that my list is a lot better than Mark's. And
yes, awesome. It's so amazing we dare not share it.
All right, so the first thing is you are a risk manager first. If you didn't learn that in 2020, you didn't learn nothing. So, we had a lot of volatility, and you can make or lose a lot of money on some of the days, some of the weeks that we had. But I'll tell you what, we have had a whole bunch of students who had great years, some of their best years. And it's because they controlled their risk, like they didn't know direction any better than anybody else, but they controlled their risk. So that is my number one, because I think it's the most important thing.
There you go. So you're doing your list actually backwards. You're going from the top to the bottom. I see. I'm going bottom to top. I'm going to keep people guessing till the end here, but I'll go your way too. That's fine. My number 4 here on my list, while I buy Dan some more time. Another lesson we've witnessed, and I've said this many times before anecdotally here on the network, when it all hits the fan, correlation tends to go to 1. We saw that play out in very, very stark relief over the course of the past year. So our takeaway from that is, at the end of the day, people have talked about, different capital asset pricing models and diversification models and 24 underlyings and 30 or whatever. You go to your typical wirehouse financial advisor, he's going to give you a 60-40 account, or maybe if he's super aggressive, 60-30-10, with that 10 being gold or something else that is quote-unquote inversely correlated. But at the end of the day, looking back at the numbers for last year, none of them really did what you wanted them to do. We crunch these numbers on our TWIFO program. I encourage you listeners, check out that whole episode we did on this. We crunched the cross-asset correlation for the entire universe of assets that trade over there at CME, which is pretty much everything. You're talking your ags, your metals, your equities, your cryptos, your energy, pretty much everything you could think of as trading over there. And so looking at those asset classes and how they performed over this insane year was pretty informative. Now, obviously, you could take different snapshots of it, and it gets even more surprising and or terrifying. For example, if you just do it through that March and April timeframe, see the correlations there, it is pretty terrifying. But, looking back at things and seeing what the strongest negative correlations were out there, everyone thinks, the fixed income category, that's my safe haven, that's my inverse correlation. The strongest negative correlations for the year over there at CME was pretty much the E-mini S&P to the 10-year and to the 2-year. The 10-year was 46%, the 2-year was 39%. So for all that vaunted inverse correlation, you got less than 50% with the 10-year and less than 40% with the 2-year. The NASDAQ to the 10-year was 37%, the NASDAQ to the 2-year was only 34% negative correlation. So if you're counting on that fixed income portion of your portfolio being that inverse correlation that you need to keep you alive in these insane times, yeah, not so much. If you're saying, maybe I added some crypto to my portfolio, that's not correlated at all. Well, it actually is, last year at least. And these are the years where it matters, right? When things are happening, that's when the correlation actually matters. Inverse correlation in a year like 2017, when nothing much really happens and vol is not existent, not a big deal. That's easy. That's really not really that material to your portfolio. A year like last year, that's when it really hits the fan there. And we saw Bitcoin and correlated to the NASDAQ by about 40%. It was a 40% positive correlation. So if you're counting on crypto to be your non-correlated or inverse correlated, think again, silver was 39%, so a little bit better there. Gold, the other thing everyone always counts on, for their inverse correlation, they were both actually positively correlated to Bitcoin. So if you have Bitcoin and some sort of metals in your portfolio, maybe you're double dipping a little bit there as well. So at the end of the day, we said it before, puts are your only real, reliable, true, contractually obligated source of inverse correlation. Even if you're talking your volatility products, they're going to be probably 70 to 80% inversely correlated depending on the time frame you're looking at and everything else like that. So they're not even a true one-to-one negative correlation. There's a lot of other things that go into that correlation over there as well. You buy a put on whatever it is, S&P, Apple, Tesla, whatever the case may be. You have a contract, you have a strike, you have a date of expiration, you have a delta. You have things that are pretty much yours, and you can rely on them, and you know exactly what you're going to get. So at the end of the day, if you were looking for some sort of a hedging instrument in 2020, puts were still the best game in town. Mr. Dan, that's my number 4. What is your next entry on your carefully prepared ahead of time list, sir?
Well, I will tell you, Mark, I think one thing that everybody learned, you know what? Not everybody learned, but I think in hindsight, the people who didn't learn that lesson and got really punished as a result of not knowing this lesson is that volatility is good. I have talked to traders this year who made a whole bunch of money during and after the market crash. And I have talked to traders this year who have lost insane amounts of money during and after the market crash. And volatility can be very good for those who know how to use it. You know, it's like any other tool, you know. I once heard somebody give the analogy that options can be like fire. You can use it to heat your house or burn it down. And you have the power to make that decision as to which one it is. And, you know, wouldn't you rather be one of the people who made a whole bunch of money based on volatility instead of just like, oh my God, what happened? You know? So volatility is good.
I think when you added that can there, I think I'm on board with the can be good. Because I think you're right. A little bit of juice, a little bit of juice is certainly good. You need a little bit of juice, right? No one wants to go back to the 2017 year where VIX was 9 and nothing happened for the entire year, right? That was not good for anybody out there either. But of course, you know, the VIX soaring past 80 in March, that's probably a little bit too much of a good thing, right? You got those nuanced time frames, but overall, a little bit of juice. If you're judicious with it, you listen to a show like this, you know what to do when things are crazy, you know what to do when things are quiet, you know how to mitigate your risk. You take some of those courses Dan's always talking about over there about how to limit your risk. If you listen to our shows or the examples we give you, you're right. A little bit of volatility at the end of the day is the lifeblood of the options market. In fact, that leads pretty close into my my next point on my list. So actually, this is number 2, so I'll save that for a second. But yeah, volatility and volume do go hand in hand. My number 3 here, before we get to that, is a fun one, maybe a little bit tongue-in-cheek, but only just a little bit. At the end of the day, Dan, the one lesson we all learned from 2020, you know, just buy Bitcoin and Tesla, right? That's all we needed to know, right? That was it. That's all anybody needed to do in 2022. I say that tongue-in-cheek, but only just slightly. Obviously, Bitcoin exploded in extreme levels. It's had an even better almost start to 2021 even. Of course, given some of that back of late, but it's just absurd levels, however you want to look at it, nearly 2x the high that it hit back in 2017 when everyone got all excited about it the first time. So extraordinary levels. Now, Bitcoin options, unfortunately, this is, remember, an option show, so we're looking at everything through the options lens. Bitcoin options still not really there for most of you out there listening to this show. You have to pretty much go to Deribit to get the most active platform, and that's not really viable for most of you here in the U.S. unless you're tunneling in with a VPN, and then you're violating their terms of service, and it's a whole process you don't want to have to go through. So not exactly ideal. There's some outlets here. CME obviously has some approved contracts here, but they're pretty beefy. Ledger X has some stuff you can trade as well. So that scene is hopefully going to grow in 2021. So that was not an easy one to trade options on in 2020, but still just an incredible product, an incredible story to watch. The other one that I know a lot more of you gravitated toward was Tesla. Tesla was far and away kind of the options and indeed the market story of the year last year. Pretty much every single day that we crunched the numbers, Tesla was a firm number 2. It was the only name that could beat it on a regular basis was Apple. And many times Tesla even trumped that sometimes. So from a volume perspective, and certainly after both of them did their little split dance there and kicked their volume up to 11, we've seen just ridiculous levels, closing in on 1 million contracts a day for each of them. Apple usually north of that, Tesla around 700,000-800,000. Still, just ridiculous numbers out there for these names. And so you guys clearly flocked to these. In fact, at one point, this is from December 14th, our buddy the Flowmaster over there at Trade Alert. He tweeted this out, and it's been just a fascinating one. I want to share it with you again here. At one point, so many people were fascinated with Tesla options. This was right before it got added to the S&P listeners. Tesla open interest, I should say, accounted for 17% of the total industry open interest. Now, that's not by contracts. That's by notional value, actually. So, you know what a fan I am of ranking things in notional value. But when you put in those terms, you can kind of see exactly how big this was. In fact, Tesla at that time accounted for almost $100 billion worth of notional value in open interest. That dwarfs SPY at the time, $22.6 billion. Amazon, a little bit shy of $17 billion. Apple, $12.5 billion. Contract-wise, Apple's going to blow the doors off Tesla. Notional volume-wise, though, or notional value-wise, that's a little bit different story. Q's, shy of $10 billion. VIX, $7.8 billion. The Russell 2000, $6.1 billion. NASDAQ, $7.7 billion. BABA, $5 billion. The only thing that's bigger than it, really single product, is the SPX, $218 billion. So you could add up VIX, Q's, Apple, Amazon, SPY, throw in an NDX, and maybe even a RUT. You still wouldn't have the notional value of the open interest in Tesla. So just insane times, listeners, we're talking about. The S at $218 billion. Tesla had almost $95 billion. And those other names I mentioned had their numbers. And then the rest of the entire industry had $157 billion. So Tesla is almost like all the rest, pretty much double it, and you got all the rest of the business there. It's just insane how much interest there was in this one company's options out there. We talked about it with our episode, I should say, about the call skew and what opportunities that opens up for you guys. Hopefully you guys listened to it. Hopefully you guys have been... If you're trading Tesla, I'm not going to advocate that you should. Moves a lot. But if you are trading it, you listen to that episode, and hopefully it opened up some eyes out there. So, Dan, number 3, just buy Tesla and Bitcoin. Forget everything else, sir.
Yeah, I love it. Man, that is incredible about the notional value of Tesla.
It's kind of scary, isn't it?
Yeah. Wow. Oh, my goodness. Whew. Well, my next one here, I believe this is number 4 for me, is the market doesn't have to act rationally, and often doesn't. And we saw this, holy crap, we saw this all year. In January, before this whole coronavirus business started, people were saying, oh my God, these valuations are, starting to get a little crazy. They're too high. And then, of course, when the COVID thing hits, the overall markets and many stocks within it, obviously, got obviously oversold, which we know in hindsight, but I think a lot of experienced traders kind of felt it as it was happening, especially those last couple of days of sell-offs. You saw crazy stuff happen with gold, where once the crap really hit the fan, gold sold off, and it's like, wait, that's the opposite of what's supposed to happen. Bitcoin, if you are a subscriber to, the idea of price discovery and the efficient market theory, did Bitcoin somehow become actually worth twice as much as it was a couple of months ago? Like, no, it didn't. So, I'm not saying Bitcoin is ridiculously overpriced now, but if it's not, it was ridiculously underpriced a couple of months ago. One was wrong. Not too much really changed between then and now. Arguably, there was the PayPal sort of acceptance of it and political unrest and all that kind of stuff, but really doubling in value, I don't know about that. So the market doesn't have to act rationally, and you don't have to care if it does. I think, it's not, we don't want the market to act rationally necessarily, because when it doesn't, it creates opportunities for us. So, just that, I think that's one thing to just take note of. And if you pay a little bit of attention to it, you might be able to spot some opportunities.
You heard it here first. Dan says Bitcoin outrageously overvalued. So send your angry tweets to Dan over there at Dan_Payne. Pastor, leave me out of it completely. I am agnostic. I love all Bitcoin people out there. So they're the new gold bugs, Dan. They get very angry if you dare to question anything on the crypto front. All right, let's move on. My number 2, I said it was kind of related to what Dan was talking about before with volatility. The other side of that coin is volume. And unfortunately, again, this is another one where I've said it before, and I'll say it again. If you want the big numbers from an options perspective, and spoiler alert, we got some big numbers this year, maybe you don't want what comes along with that. And I think we kind of all got a stark lesson in that over the course of the past year. You know, volume, you want a lot of options volume. Be careful what you wish for, because we got the numbers last year. The numbers are just in, listeners, from our friends over there at the Options Clearing Corp. 2020 was not even a record. It blew the doors off the previous record. Total of 7.52 billion contracts, listeners. Remember, that's a little bit more because they clear some other stuff over there at OCC too. So that's 7.47 billion options contracts. That blows away the previous record. Remember, their other record year was 2018, another tumultuous, another topsy-turvy year. You know, nowhere near what we saw last year, obviously, but still a crazy year. We had the VIX-ocalypse, Balmageddon, call it what you will. We had the big turnaround towards the end of the year there. That, of course, drove a lot of options paper and a lot of volatility in 2018. So in 2018, they did about 5.25 billion contracts. So you're talking about 7.5 billion now, so pretty close to 50%, blowing the doors off of that. Compared to 2019's record number, it actually was 51.2% increase in total contracts. To give you some frame of reference, listeners, they did the total amount of volume that was done in that record year of 2018 by September, middle of September of last year. That shows what a crazy year we were on pace for. And if that wasn't enough, the year went out with a bang. December was the highest, most active month in options market history, 756.9 million contracts. That beats the previous record. Pretty much almost every month of last year was a record, but the record holder going into the end of the year was June. It was June of 693 million. They blew the doors off that in December, 756 million. We'll see what January and our little bit of DC escapades earlier in the month, what that translates into from a volume perspective. I'll give you other little bit of frame of reference here, looking back at some numbers for recent years. So this year, about 7.52 billion contracts on the tape from OCC. If you go back to last year, it was 4.9 billion, so shy of 5. So you're talking about a 50% rally, a little bit less than 50% for 2018 from that record year, which was 5.25 billion. You go back to 2017, it's 4.33 billion. So you're not that far away from doubling the 2017 numbers already. 2016 was 4.17 billion. You go back all the way to, let's say, 2012, that was about 4 billion, 4.04 billion. So you're a hair's breadth away from doubling the numbers out there. So that just shows you, A, how much paper the options market can do, and then perhaps B, the corollary to that, what is kind of necessary to drive some volume in this business. And I don't know anyone in this industry right now. Everyone loves the volume, the brokers, the exchanges. It's all great. Everyone loves the influx of new traders. These are all great things. We, of course, love the influx of new listeners who have discovered our network over the course of the past year. We love all of it. But I don't think anyone would be mad if things quieted down a little bit here in 2021, just for the overall societal benefit that would convey to all of us. So there you go there, Mr. Dan, my number 2 on my list. What is yours, sir?
All right. Well, this is my fifth, my final one, because you've got 6. You cheated. And I will say that this is probably the most shocking revelation of 2020. I just didn't see this coming, but it is definitely the most shocking revelation of 2020. It's that Uncle Mike does not pay his debts.
Are you still fighting over this $1? Uh-oh, I gotta get him on the horn now. I'll see if I can dig him up and dial him up and see if he could scrounge up his. I think you wanted it in Bitcoin though, right? That was the problem.
Geez, I'd take it in, Mexican pesos if I could get it from him. I got to hold him upside down and shake it out of his pocket.
He's a bulky one. Might be kind of hard to turn him upside down and shake him. He used to be an offensive lineman.
Oh, yeah, that's true.
So
I'll just ask really nicely.
There you go. Ask nicely. But yeah, there you go. Uncle Mike, a welcher extraordinaire. I'll make sure to tell him that on tomorrow's episode 2 of the Option Block. Dan Passarelli has officially called you out as a welcher out here on the show. I like it. But I actually have a corollary to the one I just said before I give you my number one. I mentioned I had a bonus, listeners. And the bonus to that is we just talked about the absurd number of contracts that were put up last year. Remember this, another first, another unprecedented moment we saw in 2020. The lion's share of that volume, pretty much everything past mid-March, done without a pit, and a lot of it didn't come back towards the end of the year. Some of it did, but for the first time in the history of the options market, and certainly for storied pit-based products like SPX and the Eurodollars, no open outcry to be done. No one standing there in a funky jacket yelling and screaming the way Dan and I used to do. It was just all machines, all ones and zeros. The day that most options traders had dreaded for some time, certainly the market makers, came to pass, and it came roaring in, and things mostly worked. It stunned me. I thought for sure outages, we'd see huge, crazy misprints, bad trades, bad quote series going up. We'd see volume take a hit as a result. We didn't see any of that. So that to me was an enormous surprise, a pleasant one for 2020, and maybe looking forward to sign of things to come here for the business. I know CME is still kind of reluctant to reopen all their stuff over there. So, yeah, it's interesting stuff. You have any more, Dan, before I do my number one of my list, sir?
No, man, I'm dying to hear the number one.
You're tapped out. You're too busy tracking down Uncle Mike. I'll give you his number after the show so you could track down. I think you wanted it in pesos, right? So I'll make sure that happens. For my number one, it's a pretty clear one. It's a theme we've talked about on the network for almost all of 2020. It's kind of a fun one, and it certainly is resonant for the audience of this program, is that you guys, the listeners of this show, the retail, the proverbial one-lot traders of options out there, you guys are now the kings. You're the big dogs. It used to always be, what are the institutional folks in the S and in the VIX and these large size players? What are they up to? What do they want to trade? How are they moving skew? How are they moving volatility? No longer. Listeners, you guys are in the driver's seat. It turns out the only place you really want to drive is, up the Apple and Tesla call skew, but that's so be it. That's where you guys want to go. So you guys, whether you want to call them the Robinhood traders, the one-lot traders, the small retail options traders are now the big dogs out there. And what you guys are interested in, what you want to trade, the strategies you like, the ways you trade are driving the market for pretty much the first time that I've been doing this. So it's fascinating to see. It certainly makes a show like this much more interesting for 2020, and it should make you guys a little bit excited too. You guys are the bells of the ball now. Folks are going to be courting you. They want your paper. They want your trading. They want to see what you guys are up to. So hopefully that's a beneficial trend of 2020, hopefully one that persists. I mean, we all know you can't just keep rolling the dice on Tesla and things forever. Eventually that's going to turn around. Hopefully the folks who have been doing this are listening to this show or going to their broker, getting whatever educational advice they can so they learn that they can progress beyond just loading up on lottery ticket calls, and they'll be around for a little while. And we'll get to talk to you for many years to come. But that, to me, Dan, is my number one takeaway, lesson learned / surprise of 2020. What do you think of that, sir?
I like it, man. Power to the people.
All right, Mr. P, that music means we got to get out of here for this episode, but don't worry. If you're listening live, listener, spoiler alert, you get to hear the next episode right now. Otherwise, you have to wait for a whole week, maybe 2. So, it's good reason, good incentive to join us live on Wednesday afternoons, Education Wednesdays, when Dan and I record this. But before we go, Mr. P, sir, if folks are interested, they want to reach out to you with their own thoughts on 2020. Maybe they learned some lessons. Maybe, hopefully not the hard way. Maybe they did. Maybe they want to avoid doing that. Maybe they want to keep what they made in 2020, sir. Where should they go? What should they do?
Make your way on over to markettaker.com. I mentioned a couple of months ago now, we've got a shiny new website. Still got the luster to it. So come on over, check it out. We've got a lot of free resources there, and we'd love to share them with you.
There you go. Market taker, 2 T's. Don't be a silly one like me and forget the second T. 2 T's to go over there and kick the tires and light the fires. On behalf of Mr. P and D, myself, I want to thank all of you out there who joined us en masse in 2020. We love all of you. Glad to see you all back and then some in 2021. And we'll be back in a little bit with another episode of Options Bootcamp.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.